Jerome Powell indicates he's open to interest rate cuts, while the labor market is a little confused with job openings and unemployment dropping, but also hiring slowing. My name is Jay Rios, principal broker for Rivers Realty here. Let's talk about the past week, June 30th to July 4th. As I alluded to, Fed Chair Jerome Powell had a speech in which he said he wouldn't rule out interest rate cuts, something atypical of him, as he is usually very political, very professional, especially in the face of the Trump administration, really berating him with comments such as, anyone will be better than Jay Powell. Jerome Powell typically sticks with his very usual, we'll see what the data says, we will do what we can to balance unemployment with inflation. That is their entire goal of the FOMC in the first place. Good to hear him say this. They have a meeting at the very end of this month, so kind of keep up to date with that here. Trump and Powell's relationship might be getting even worse after the Trump administration is pushing for Congress to investigate Jay Powell due to his political bias. So Tuesday, same day Powell had a speech, we got some information about job openings, and this has actually increased to a 6-month high here. This would indicate that employers, firms are bullish on the future because they think that there's going to be growth, in which case they need more people to work. So this is a good sign. However, this is where it gets a little confusing. Hiring is slowing. So while there are more jobs, hiring isn't happening as much. What could that mean? Well, maybe that there aren't as qualified candidates out there to do the job that the firms are looking for. And there's also a lot of caution about the near future of the United States, given the uncertain political climate between countries, including tariffs on some of our biggest traders, such as China, expiring. Trump had set a 90-day pause on them, so people are saying kind of back down instead of like setting it firm. And that is coming up for expiration here next Wednesday. So very, very close to what's to come there. The ADP came out with a similar report regarding the private sector, and it confirmed that it lost 33,000 jobs, very much opposing the expected increase of 100,000 jobs. There's a pretty large discrepancy between what people expected and what actually were the results. So what does this mean for wages? Well, let's think about how high wages come about. Typically, when there are a lot of job openings, employers are looking for a lot of employees, and there is low unemployment, then that means that hiring is picking up. But that's not actually the case, because hiring is not picking up. So maybe employers just have a little more of a high bar for their candidates. But let's look at unemployment, and let's look at jobless claims. U.S. unemployment, it did decrease to 4.1% from like 4.2, 4.3 the month prior. And while it looks good on the surface, it was mostly supported by government employment. The private sector actually had the smallest gain in the past 8 months. It was not as great as it looks. This ties back to the ADP report we mentioned of losing 33,000 jobs. So on Thursday, we got unemployment and we got initial weekly jobless claims. This also dropped a little bit under market expectations, but a drop is good nonetheless. Now, with jobless claims dropping each week since early June, that is definitely a good sign. But if we look at it from a broader perspective, as in an annual, it is not that great compared to earlier this year. So keep that in mind, that we're still higher than what we were beforehand. All right, so what can we conclude from all this? Well, there is definitely potential for higher wages, but employers are struggling to find qualified people. Lower unemployment means that fewer people are also being fired, so it is overall good. But I think these are some of the really early signs of a softening labor market. And if there are any future shakes in the boat or uncertainty, we're probably going to see some pretty drastic raises and lowerings of the stats in the wrong direction. A sturdy and resilient labor market is something that Jerome Powell has actually quoted in the past to keep interest rates where they are. So while it is good news for the economy, this is going to dissuade them from actually wanting to lower it when they have their meeting at the end of this month. Now we'll see, obviously this is a weekly report, the jobless claims, so we'll see that pretty consistently here for the next 2 or 3 weeks. Keep tabs on it. Please follow, like, subscribe if you like this content. Thank you all so much for watching. Have a wonderful 4th of July.